Welcome back to Furniture Industry News. Today is May 16th, 2025, and we've got another packed episode full of insights for professionals across the furniture world, from retail to manufacturing and everything in between. If you're looking to stay ahead of the trends shaping our industry, you're in the right place. Let's start off with some good news. April brought a strong jump in furniture sales, giving retailers a much-needed boost. According to the latest report from the U.S. Department of Commerce, retail furniture and home furnishing store sales hit just under $12 billion in April. That's a 5.9% increase over March and an 8.6% jump from April of last year. This isn't just a blip. Retail sales have grown for 4 straight months now. So while there's still plenty of concern about inflation and consumer confidence, this sales streak signals that people are still spending on their homes. For brick-and-mortar stores in particular, this kind of momentum is reassuring. But while the short-term picture looks bright, the longer-term forecast is a bit cloudier. The semi-annual economic outlook released by Furniture Today shows that growth expectations for 2025 have been revised downward. At the start of the year, the industry was hoping for around 3% growth. Now, expectations are closer to 1.5%, cut in half. What's causing the shift? A mix of cautious consumers, interest rate uncertainty, and cost pressures from global supply chains. All of this has made businesses more conservative in their projections. It's not a reason to panic, but it's a reminder to stay lean, adaptable, and focused on what's really driving value for customers. And speaking of cost pressures, tariffs are back in the spotlight. There's a lot of chatter across the industry about the current 10% tariff rate on Chinese furniture potentially jumping to 30%. That's a huge jump, and it could dramatically change the way importers and retailers make buying decisions. At 10%, many companies can adjust pricing or absorb the cost. But at 30%, we're talking about significant price increases at retail and major shifts in sourcing strategies. Manufacturers who rely heavily on Chinese suppliers may need to reevaluate their options quickly. And for retailers, it could mean passing higher costs onto consumers, just when price sensitivity is already high. Keep an eye on this, especially if your business has deep ties to Asia. Now, while we're on the topic of the global market, here's a surprising bright spot: Vietnam. New data shows that Vietnam's furniture shipments rose a solid 21.6% in 2024. That's a strong recovery after the industry's post-pandemic slowdown. Vietnam has long been seen as a key alternative to China for U.S. furniture importers, especially for wood products and upholstery. With China facing higher tariffs, Vietnam's upswing might continue. So for sourcing managers and importers, Vietnam is a market worth watching closely as we head deeper into 2025. Back on the domestic front, let's talk about housing. The National Home Builders Association's latest survey showed a dip in home builder confidence for May. Builders are dealing with rising construction costs and continued concerns over affordability. Mortgage rates aren't helping either. When home building slows down, it often hits furniture demand down the road, because new homes usually mean new furniture purchases. While we're not in crisis territory, this trend is definitely one to monitor if your business relies on new homeowner sales. Now, shifting gears a bit, let's talk about the evolving customer base. A recent survey found that younger consumers, especially millennials and Gen Z, are driving a lot of growth in online furniture sales. That's not surprising. But here's the kicker: delivery issues are a big deal for them. Over 60% of younger buyers reported some type of delivery problem in the past year, from missed windows to damaged goods. These issues aren't just annoying, they're influencing where and how people shop. If your business is selling online or even offering home delivery, tightening up logistics could be one of the most important investments you make this year. And it looks like Wayfair is trying to bridge the gap between online and offline. The company announced plans to open its third large-format retail store, expanding its physical footprint in a big way. This move signals that even the biggest e-commerce players see value in having real-world showrooms. For Wayfair, it's a chance to let customers touch and feel products and solve those delivery concerns by offering more flexible pickup or return options. For traditional retailers, this is a reminder that physical retail isn't going away. It's evolving, and there's plenty of room for both formats to succeed. But not every retailer is seeing sunshine. Dillard's reported a drop in sales for the first quarter of 2025. The company cited reduced traffic and lower home category performance as key factors. While apparel still did okay, furniture sales were weaker than expected. Dillard's isn't alone here. Many department stores are still trying to figure out their identity in a market that's pulling toward either value-based or experience-driven models. If you sell through or compete with these channels, it's worth thinking about how your brand stands out in this shifting space. Now, here's an interesting retail shakeup north of the border. Canadian Tire just bought the brand assets and intellectual property of Hudson's Bay. This move gives Canadian Tire access to one of Canada's most iconic retail names, and it may open the door to furniture category growth. While details are still unfolding, this deal shows how brands with heritage still hold value, and how they can be repositioned for modern retail strategies. For those working in or with Canadian partners, this acquisition could lead to some big changes in how home and furniture categories are marketed and sold. And before we wrap up, let's return to the topic of tariffs, because it's not just suppliers feeling the pinch. Walmart recently voiced concern that higher tariffs are already making their way onto store shelves. According to reports, customers can expect to see higher prices on many items, including furniture, due to increased import costs. Walmart, being the biggest retailer in the US, has the buying power to negotiate better than most. So, if they're raising prices, you can bet others will have to follow. For manufacturers and smaller retailers, this could mean rethinking price points, product mixes, or even packaging to maintain margins. That's all for today's episode of Furniture Industry News. From booming April sales and online growth to tariffs and global sourcing shifts, there's a lot going on that professionals in the industry need to stay tuned into. Whether you're on the retail floor, working the factory line, or managing supply chains, being informed is your best edge in a fast-changing market. Thanks for listening, and don't forget to subscribe to Furniture Industry News wherever you get your podcasts. We'll be back soon with more updates to help you stay ahead of the curve.